Welcome to the Money Show in Orlando. I'm Paul Dykewich, the editorial director of Eagle Financial Publications, and I get to ask a couple follow-up questions to Hilary Kramer, who is a prominent Wall Street financier and money manager. So Hilary, let's talk about your Value Authority service and how you look for things that are undervalued and seeking good opportunities to invest in likely appreciating stocks that could double or triple or do even better.
Well, what we look for are companies that are growing their bottom line, and yet at the same time their stock price is lagging behind, usually because it's a sector that's out of favor or it's an area that just isn't understood. So for example, we've done very well with Omnicom, a traditional advertising agency dismissed for dead, OMC, here with a nice dividend yield, yet it's the company that's putting people into social media, in that they're writing a lot of the advertising, buying a lot of the advertising for new age advertising. This is where you want to be, areas that are coming back to life.
Aside from Omnicom, are there other stocks or areas that you think are prime as an opportunity for investors?
Some of these utilities are growing and expanding. They're going into areas of green energy, clean tech energy, sustainable. AES is a very good example of a company that you have the dividend yield, they have a nice steady revenue stream, but at the same time there's opportunities to make money where these companies are expanding and are going to see multiple expansion. We look at those PE rates.
Now, of course, people are worried about the market. The market took a hit in the fourth quarter. It's starting to come back a bit, but obviously there's some uncertainty with the Chinese-American trade situation, what's going to happen with the Fed and interest rates, economic growth around the world. So with those types of things in mind, are there any places people can go for a bit more safety, like utilities, but something a bit different?
The financial institutions. Now, it's really bifurcated. You want to be careful about traditional savings and loans, companies that have to make money off of the margins of what it costs them to borrow money. So look at the companies that are more of the boutique investment banks, like Evercore, EVR. When the market goes down, Evercore goes up because they do restructuring. Bankruptcies, managed bankruptcies, General Motors, United States Post Office. You're talking about a company with no debt and all the growth potential. I love Goldman Sachs, GS. Goldman Sachs has had a real overhang on their stock because of pending litigation, because of an unfortunate event, fraud that took place in Asia, but you can make so much money because Goldman Sachs trades at about book value. So at 190 something approximate dollars per share, you can be looking at a stock that 2 to 3 years out could be $300 a share, and you have the dividend yield. That's value to us.
Wow, that seems really interesting that the gold standard company, Goldman Sachs on Wall Street, could be the undervalued opportunity to take for 2019. Is there a place people can go to find information about Value Authority and your other services?
Yes. You can go to GameChangerStocks.com, and that will present all of our newsletters, or just HilaryKramer.com, and that'll take you right to Value, Game Changers, and our trading and option services.
And of course, that's Kramer with a K, K-R-A-M-E-R. Hilary, thank you so much for joining us.
Thank you, Paul.